The Petrodollar agreement between Saudi Arabia and the United States originated in the early 1970s. This arrangement was born out of a series of agreements in which Saudi Arabia and later other OPEC countries agreed to sell their oil exclusively in US dollars. In return, the United States provided military protection and economic support to Saudi Arabia. Key aspects of the Petrodollar agreement: oil sales in dollars. Saudi Arabia agreed to price and sell its oil exclusively in US dollars, which led other OPEC nations to follow suit. This created a global demand for the US dollar because countries needed dollars to purchase oil. Recycling petrodollars, Saudi Arabia committed to investing a significant portion of its oil revenues back into US Treasury securities and other dollar-denominated assets. This helped finance US deficits and supported the US economy. Military and economic support. In return for pricing oil in dollars, the United States offered military protection and economic aid to Saudi Arabia. This included the sale of advanced military equipment and training to the Saudi military. Implications of the expiration of the Petrodollar agreement. The expiration or significant alteration of the Petrodollar agreement could have several profound implications for global economics and geopolitics. Impact on the US dollar. Decreased demand. If Saudi Arabia and other oil-producing countries begin accepting other currencies for oil, the global demand for US dollars could decrease. This might lead to a depreciation of the dollar. Inflation. Reduced demand for the dollar could increase inflation in the United States as the value of the dollar falls. Global oil market dynamics. Pricing diversity. Oil prices could be quoted in multiple currencies, leading to increased complexity in global oil trade and pricing mechanisms. Currency risk. Oil importing countries might face increased currency risk if they have to purchase oil in different currencies. U.S. economic and fiscal policies. Higher borrowing costs. With decreased investment in U.S. Treasury securities by oil exporting countries, the U.S. government might face higher borrowing costs. Fiscal strain. Higher interest rates could lead to greater fiscal strain, especially if the U.S. continues to run large budget deficits. Geopolitical shifts. Realignment of alliances. Saudi Arabia might seek to diversify its alliances and economic partnerships, potentially strengthening ties with other major economies such as China and the European Union. Regional stability. Changes in the U.S. Saudi relationship could impact the stability of the Middle East, with potential ramifications for regional security and energy supplies. Alternative reserve currencies. Rise of other currencies such as the euro or the Chinese yuan could gain prominence as reserve currencies if they are increasingly used in global oil transactions. The end of the Petrodollar agreement could herald a significant shift in the international monetary system and global economic balance, with wide-ranging effects on trade, finance, and international relations.